Let's welcome David.
Thanks, Simon. Can everybody hear me? This is good? Excellent. So I know the guys from InSick, they're one of my clients, so I'll tell you when they get here. I was expecting 15 minutes of fame, but apparently I'm only getting 7. So if I sound a little rushed, that might be why. First Associates Loan Servicing. I'm the CEO. I'll talk a little bit about who we are, what we do, and some about who we do it for. So how many people in the room are capital providers in this space? Anybody? How many are originators? Come on, let's call that raising your hand, come on. And how many are originators? Okay, we have originators as well. Our company was founded in 1986. It was originally founded as a servicer of mobile home loans in the southeastern United States. Very exciting market space. We're headquartered in San Diego. We started in San Diego and we're still there today. The current management team purchased the company 6 years ago. It's privately held. We have no institutional money in our capital structure. What we saw 6 years ago was a tremendous dislocation in the servicing industry. And I know that we're here to talk about P2P, and servicing is its own industry. But it's a sleepy industry, even though it's quite large. And it's quite dysfunctional in its own way. What you find is generally that companies treat it as a BPO product. You don't really have results orientation. You have companies that wrote some proprietary software 20 years ago, and now they're all scrambling to find some guy who can code in COBOL or Fortran so they can update it or add new features. Most companies only service one asset because that's all their software allows them to do. Often if they service 2 assets, you'll see they actually have 2 stacks of proprietary software in order to enable them to do that. We don't have that. We are completely cloud-based. Everything we do is SaaS-based. We have several SaaS-based platforms that we knit together, and that forms the basis for our loan servicing platform. We like that strategy. It works very well for us. It allows us to move from one platform to another if one of the platforms is no longer the best thing on the market. And we've done that several times, and it's worked very well. So one of our goals there is not to become trapped in our software. We are one of the best places to work in San Diego, which is fabulous since I work there. That hasn't been released yet, but it'll be announced sometime in the next couple of weeks, which is great news for us. We hire only experienced people. I think you'll see when we go through a little bit of what we do, one of the things we do, and it's almost all private label, is that we handle your customers for you. And when you're handing your customers over to us, for us to talk to them on the phone, to call them, to mail them stuff, to do all these things, you want them to have a good experience. We call up and say, this is XYZ company, can we help you with something? You don't want them to tell their friend, oh, I had a horrible experience with XYZ customer, because that's your customer. And we value that relationship, and we build on that relationship so that when your customers talk to us, it's a good thing for them. One of the things that we saw as a management team when we took over the company 6 years ago was that it had a wonderful history of helping borrowers meet their financial obligations, leaving the borrowers feeling good about that interaction. There's so many horror stories, people will call up and they just scream. It doesn't work. We service a wide range of asset classes, about 15 different asset classes. We're the largest servicer of solar loans and leases in the United States. We service auto, boat, student loans, elective medical procedure, unsecured consumer loans, just the gamut of consumer finance. It's another thing that's different about us. We're able to handle all of these things because we are at the beginning of our technological life cycle. We're not shackled into just one. And being in multiple asset classes makes us much better at all of them. And things come along as peer-to-peer does and looks a little bit different. It's easy for us to accommodate that in many different models, in many different variations of it. We're very much a bespoke servicing house. And we have this last thing on here. It's actually not a typo. It says SSAE 16.2, which is a process audit in the servicing industry. It's kind of the de facto standard. It's akin to an ISO 9000, third-party audit. It takes all the mystery about what you're actually doing out. So for those of you who are originators, when you go to a capital provider and they want to know who your servicer is, if you say First Associates, first of all, they'll say, oh, good, because we're already working with them, which makes their life easy. Second of all, they're going to say, do they have an SSAE 16 level 2? And instead of kind of looking blankly at them, you can say, I know exactly what that is, and yes, they have one. So let's get on to what we do. Everybody always asks me this. It's like, yes, I understand you're a servicing firm. What does that mean? What do you actually do? That means you mail people statements, right? Well, yeah, in a way, that's exactly what that means. We have two sets of clients. We have originators on one end of the value chain, and we have capital providers on the other. We work for both parties, and we fill in all the activities in between those two. If you think about what that actually means, it means funding services. Simple things like we can hold the money in trust and disperse it to borrowers if the situation calls from that. We do a lot of verification calls. Is this Joe Smith? Did you actually execute this contract? Do you understand the terms of your financial obligation? In a very friendly way, which obviously capital providers like this. They like to know that this transaction actually happened. Contract validation. Does the contract actually reflect what the loan tapes say? Borrowing-based certification. Is the borrowing base that's submitted to the capital provider actually the same that it's supposed to be? It's not the same borrowing base month over and month again. Document management. For different asset classes, this includes different things. For instance, in the solar industry, this includes a lot of UCC1 filing. In California, PUC filing. We manage all that document filing, deal with the counties, deal with the government. In other asset classes, it means something different. In auto, it means titles. Same with boats, RVs, motorcycles, even mobile homes have titles. So we handle all that kind of regulatory stuff. We do tax return filing, so if there's a sales tax element to your financial obligation, we handle that as well. We do all the reporting, gather up the money, send it in. I'm telling you, you do not want to do your own sales tax. It's an awful process if you're not doing it at scale. We obviously do a lot of payment processing. You would hope we do a lot of payment processing, and we do. And that includes credit cards, ACHs, debit cards, Western Union, you name it, we process it that way. It all goes, if it comes in a check, goes through an automated lockbox procedure at the bank, but it's highly automated, highly secure, highly compliant, and works very well. People call us for customer service issues fairly constantly, so your customers will call us and say something to the tune of, I didn't get my statement. I don't know how much I'm supposed to pay. I thought it was a lease. I didn't know it was a loan. Any of these kind of whole raft of things that happen when you have a fairly complex financial transaction with someone, and we handle all that for you. If you have something which has a slightly different element, say it's got some operations and maintenance component to it, again, solar is a great example of this. It's like, my panels aren't working. So we handle some of that as well to a certain level, and then can hand it off to the technical infrastructure as well. Delinquency management. I realize I'm saying this, but I realize that nobody here has a portfolio with any delinquencies in it, right? That's what I thought. So maybe we shouldn't worry about that. But we grew up in the subprime, mobile home, southeastern United States industry. We understand delinquency management. We're very good at it. It's interesting that people who are very subprime require a kind of lot of outreach, a high-touch approach, friendly. We tend to be kind of omnipresent in their lives through a whole bunch of different communications channels. Because you want to match the communication channel that they use, right? For students, you use text. Mobile home borrowers don't use a lot of text. It's all this type of thing. But it turns out that prime borrowers, they like the same stuff. It's just a different conversation. But they want to be communicated to in the way that they want to be communicated to. They want to talk to you at the time they want to. It's very important that you're able to resolve their issue in one conversation. Prime, subprime, not that much difference. Delinquency management on the subprime usually equates to just very good customer service with a prime customer because they want communication and they want it the way they want it. We'll talk about investor reporting, which can be anything from the mundane to the complex. We do stock standard reports for those originators who want that. We also do very complex securitization reporting for some of our larger customers. And we do a lot of backup servicing. Who in here knows what backup servicing is? Okay, good. So there's lots of people, including Mark Gleason, who know what backup servicing is. We do a lot of it. We do a lot of it in this industry. Just say if you're picking a backup servicer, make sure that you get one that can handle the trigger event when it falls over. Nobody ever thinks it's going to happen to them. We've been through several trigger events just this year and last. You need to have someone who can handle the asset that you're working with, not someone who's in another asset class. I'll go real quickly to some of the people that we work for before Simon throws me off the stage. We work with the capital providers I was talking about, whether it be Fortress, BlackRock, Colchis, Atalaya, Ares. I'm going to say Ares because I saw Jeff Kramer walking around earlier. He'll yell at me if I don't say it. And also originators across lots of asset classes, including, I would say, probably roughly almost a majority of the companies that are here at this conference who are platforms. So lots of clients. If you're an originator and you're looking for capital, they will not balk when they hear our name as the servicer. They'll be very happy. If you're a capital provider and you're looking for originators, we obviously know quite a few of them. So, okay, thank you.